next interesting tax benefit option that most of our people are not aware of is ELSS, which is equity linked savings scheme, ELSS. So it's a mutual fund basically. I had seen or I had observed that many people they are a bit scared of mutual funds, saying that they invest a lot in stock markets or equity markets. But I would pause that because it's one of the favorite tax instrument option if you are well aware about or if you have read a lot about. So this is ELSS, and it has a lock-in period of 3 years, and the returns are really awesome, which is at least 12 to 15%. Okay, so if you ask any CA or if you ask any financial advisor, I mean, which is a great return instrument option as well I can save tax for, is obviously ELSS. And so maybe I'll try to give a little bit more about ELSS. So this is a mutual fund category. If you don't know about mutual fund, so it's a scheme generally initiated by government of India, where they will invest a major part of it in the stock market, and you need not to do anything. You have to pick a fund or a name of the fund, which maybe I might be telling in short, where I had invested actually. So you have to open an account. So basically you can go for zero brokerage firms to open an account. So I would suggest you to open your account in Zerodha. I'm not providing sponsorship video for them. I had opened it there. It was seamless. So you had to pay hardly 200 or 300 for a starter, or for a newbie. It would be a great start to start with. You cannot go directly to the mutual fund house, and you cannot purchase there. If you are well known about it, you can do that. Okay, so mutual fund is a kind of scheme where you can pick your fund based on few factors, and you can start investing as lump sum or monthly basis. So that they will say systematic investment plan, which is SIP. So if you opt for SIP, you can enroll that for auto debit, where it will get auto debited from your account. So how can I choose best performing fund? I'd suggest you to go for Money Control website, where you can pick categories on that. You can go for ELSS category. Few factors just keep in mind. Just go for direct, not for the other option, which is brokerage, or which is via brokerage, where your returns would be little consumed by them. If you opt for direct, there is something called expense ratio, which is nothing but so what mutual fund houses do. So they pick a set of stocks in the sense company stocks like TCS, Infosys. There are many companies, okay, in India. They will pick a set of stocks, and they will invest your money onto that. In returns, they will get back some expense ratio for them. Like it's very minor, like 0.1 or 0.2 something. But if you are not opting for direct, if you are going for other option, it would be little high, where you lose your money. So go for direct and check about the expense ratio, because if you go on enter in Money Control, you will be listed with at least maybe 50 plus. You can filter it and check the performance of last 3 to 5 years, at least 3 years. Check it out. So whichever had given a high rate of return, you have to go for it. So I've told you how to start. I've told you what factors to consider. I've told you how to start your account as well, and the lock-in period of this is 3 years. So I would not suggest for SIP, because if the lock-in period is 3 years, say you are paying for the month of Jan, you can redeem that amount after 3 years on that month of January. So you can redeem just say if you are opting for 2,000 of SIP, you can just redeem only 2,000. So for tax saving ELSS mutual fund, it's just to go for lump sum, so that after 3 years, which is the withdrawal amount with your complete returns, are tax free, right? So so I'm going to just list 3 mutual funds that I have invested and I've got great returns. The number one is Axis Long Term Equity Fund. So I'll be just showing you in this snap that you are seeing right on the screen the name of the fund, the returns, and the few details. The second one is Aditya Birla's Tax Relief 96 Mutual Fund. The third one is DSP Tax Saver. So these 3 I have picked and I have invested and I've got great returns. Again, I'm not financially advising anything here. It's up to you. If you're well versed, if you're a geek on that, up to you, right? So the next, most suggestible instrument is housing loan. So I have a financial advisor for us. So he was keep on advising me to go for purchase or construction because they know very well about, because you might be getting a lot of tax benefits out of it and you can sit at your own home. Cool, right? Okay. So housing loan again. So I just missed. So ELSS also comes under ITC. Till now, whatever we had explained, other than medical insurance, everything will fall under ATC only. Again, to repeat or to remind, 1.5 lakh is the maximum limit that you can opt for. So please split it accordingly. I'll try to show you some, the sheet, how you can split it maybe at the end of the video. Don't skip the video, otherwise you'll miss the niche content. Right. So in the housing loan as well. So when you are purchasing a house or constructing it, you can opt for housing loan where the principal amount that you had paid on the particular financial year can come under again ATC with the maximum limit of 1.5 lakh. So you can check your tax income or tax interest certificate of the housing loan vendor that you had purchased with for the details. And if you're so there will be 2 elements, one is interest and another one is principal. So as I told, principal will come under again ITC, but the interest up to 2 lakh you can opt under the section 24. So there is something called section 24 where the interest paid in the particular financial year that you can opt for. So there maximum up to 1.5 and here maximum up to 2 lakh. You can have a question like, we have taken a loan with jointly, so what can I do? So it basically depends on your percentage of share. So for an example, me and my husband, we have opted for loan and we are going to show 50%. So it's like they will ask you everything that you had put your shoes with, right? Alright, so there are few more things. You might have spent stamp duty, registration fees and all those things during your purchase in that particular financial year. You can show that as well, but again sadly into ATC only we can't do much. Right, so these are all the major things under housing loan. So there is something called ATEE and ATEEA. So ATEE is nothing but it's for the first time owner. So under certain criteria you can opt for certain amount for that. I'm not going to tell much in detail about. If you are first time owner, you can opt, and if your property is not exceeding 50 lakh, you can opt for, and your loan should not be greater than 35 lakh. So if these conditions are met, you can opt under ATEE. ATEEA is another one which is only in the financial year of 2019 to 2022. The ATE is 2016 to 2017 financial year only. And for this ATEEA, again you have to be a first time owner. You should not own any other houses than this, and your stamp duty amount should not exceed 45 lakh, and you should not opt the other category ATE. You cannot enjoy all the benefits, right? So this is about housing loan. So again, all of these major categories will fall under ATC only, other than this interest part. There is one more interesting part. The final instrument that we are going to discuss is NPS, which is National Pension Scheme, which is initiated by the Government of India to provide old age security to the citizens of India. So this one is the most secured one, I would say, but again there are some tricky things inside. So this again it comes under two categories. One is again first into ATC up to 1.5 lakh, but it provides additional benefit of 50k under the section called ATCCD 1B. Okay, so it provides options to both private and government employees. There are two options actually. So here there are some important things. I'll try to list it out. So maybe if you are not getting, or if you need more information, you can just check it out online. So first thing is, it has two accounts. One is Tier 1 and Tier 2. Tier 2 is not tax exempted basically for everybody. Maybe for central government employees it is. So we can't do much. Tier 1 is pure tax free. It is up to your retirement or up to the age of 60. After 60 is what you can withdraw. So that's the main thing to start with. So what is NPS? Where do they invest? So they do invest in certain asset classes, which is including equity markets, stock markets. And so they have asset class E. E is nothing but equity markets, and G is nothing but government bonds or other things, and C is something but corporate bonds and related instruments, and A is additional instruments. Okay, so it has two choices. One is active and another one is auto. Active means it assumes that you have enough knowledge about all the asset classes and you can allocate the own percentage out of 100. You can split and you can choose which asset class hold how many percentage, right? And the auto is best for the new joiners, which would pick based on your age group. Okay, and it would vary. If you are crossing your 50, automatically it would reduce your percentage in equity. So auto for I think between 30 to 35, so max it would allocate 75% for your equity, and remaining maybe I think 15 or 10-20 for your corporate and government bond, right? So in Tier 1, at least you have to start an account with 500 rupees. And how can you start your account? So there is a website for that. I'll put it in the description box. So you have to, it's seamless. You have to give your Aadhaar number, PAN number and your mobile number, with which you will be given a PRAN number, which is Permanent Retirement Account Number. So that is the identity for you, and that would be used to, that you have to use it for login into that account. Right, so I'm mainly talking about the additional 50k which I'm investing at least for last 3 to 4 years. So there is something called you have to choose a pension fund manager, PFM. So there is a list of again it is just like the mutual fund list that I had explained. You can go to Money Control website and you can put this and you can research based on the returns from their 3 years, past 3 years, past 5 years, how they had performed. So I had chosen HDFC pension fund manager for my Tier 1 and Tier 2. I used to put just 2000 or something just to see how it progresses. But in Tier 1 again I had picked HDFC pension fund manager. And so there are some withdrawal rules and other things and all. So after year 60 you could withdraw only 60%. So the remaining 40% it's supposed to be get deposited on a monthly basis. And again the returns, it would be obviously maybe starting from 15% at least, because it has a long lock-in period, right? And if you're continuously paying for 3 years, you can withdraw 25% of corpus for certain needs. Again, it might be for your some emergency purposes, hospitalization, or your children's wedding or construction purpose or something like that. So these are all the major things that I wanted to cover. Again, we have come to an end. So I'd try to put this sheet where how much you can allocate. As you see, maybe if you have 1.5 lakh, you can spend certain amount like 40k in your term insurance, maybe 10-20k in your ELSS mutual fund, or remaining 20k in PPF, or if you are paying home loan, the maximum ATC would go into that. You could spend something like 10,000 or something, because PPF, Suganya Samriddhi Yojana, health insurance, term insurance and all must have items in your bucket. So we are all earning really hard. For me, at least, the principle that I hold is every penny matters. So think accordingly, save your money in a safe bucket so that it will give you back great returns. Thank you for watching our video. Bye bye.